I don't have anything. Good morning, this is Wayne Bilal with another smart profit maximizing moment, and this is Tessie, who's been trained when I pick her up to start recording that she's going to get a treat so that she stays still half a second. Anyways, today we're going to talk about the last of the mistakes that common business mistakes that business owners should avoid. I can hold her for a little while, but then she becomes a total distraction. She is a cutie though. Anyways, let me do a better job introducing myself. My name is Wayne Bilal. I'm the founder of my own CPA firm. Been in El Paso forever. The CPA firm celebrated our 28th anniversary this last August, just passed. Been doing this a lot longer, back into the late 70s. So I've been concentrating on working with small business owners for 40 years, 50? I don't know, I don't count. A long time. I earned every one of these gray hairs. Our firm concentrates on three things. One, helping business owners make more money. That's the reason for these profit moments. I'm also the creator of the Smart Profit Maximizing System and the Hidden Profits, the 21 secrets, the 21 steps to increasing profits from inside your business. All right, I said that wrong, but that's all right. And of course, tax planning. We're running into tax planning season. It starts the end of this month, all the way to Christmas, really. All we're doing is tax planning. The last 3 years alone, we helped our clients save over $4.3 million. That's money that they got to keep. They didn't have to send to the IRS. And finally, of course, we do tax returns, between 600 and 700 tax returns. Most of those businesses and the business owners and their businesses, their individual return plus their corporations and whatever else they have. So we do the more difficult ones, not the crazy difficult, but the, let's say, middle into hard. If you haven't filed your 2018 tax return, you have till October 15th. So today's October 1st when I'm recording this, so you have 2 weeks. 2 days ago, we started this series last Thursday. All right, so we started about why business owners always seem to make the same mistakes, and it's really very simple. They were good at a craft, but they really aren't good at running a business. All right. Then we talked about marketing and sales mistakes that people make on Friday. Yesterday we talked about market management mistakes. Today we're going to talk about money mistakes. Business is all about people. Okay, selling to prospects, creating support networks, motivating employees is vital to your success. This is the work most business owners enjoy and concentrate on. They figure all they need to do is turn everything over to their CPA or bookkeeper and let them worry about it. Unfortunately, this doesn't work, okay? Business is a numbers game that the business owner must become at least reasonably proficient at in order to gain massive profits. Matter of fact, I would argue my most successful business owners know their finances. Matter of fact, let's look at one industry in particular. Let's talk about doctors. Doctors used to be able to just go to school, struggle with that, do their internship, come out with their degree. They're now MD. They open it, they throw their shingle open, and they got rich. It's not that way anymore. Now they still make a comfortable living, but unless they're good at the business side, they don't really get rich anymore. All right, simple as that. All right. Here's some of the common mistakes that I see business owners make. First and foremost, they don't review their numbers, at least monthly. All right, they don't know where they're at. I'm literally working with a client that I did their tax return in this year, and only when I did their tax return, it was on an extension, so it was after March 15th, after April 15th. Only when I did their extension did they know what kind of money they made last year. How do you manage doing $3 to $4 million in sales? How do you manage that? I'm truly amazed at that, to be honest. At a bare minimum, it's important for you to know how much you have in the bank, what your sales are, what products are selling, who's buying, how much you owe, and your profit margin. A regular review allows you to adjust and correct before a small problem becomes a big headache. It's important to do those little adjustments, okay? And tell stories of, how we caught errors, but we're not, just understand, you need to take the time to at least look at your financials monthly and other documents too, what your sales are. So get with a CPA or your bookkeeper and have them create a monthly to-do list for you. Undercharging for services or products. This is a big one. I have made that mistake more than any other, to be honest about it. Very few customers buy solely on price. The ones who do, you probably don't want as customers. If you've done a good job marketing your unique selling position, remember, go back 2 days ago and what was important about that, you should have no trouble increasing your prices. For many businesses, this is the difference between barely surviving and raking in massive profits. Next thing, concentrating only on increasing sales. This is the one. Ask companies how they're doing. They say, oh, my sales went up by 20%. I don't care about sales. Sales is great. Sales is for your vanity. It makes you sound good. I'm this big. All that matters is how much money ends up in your pocket. All right, simple as that. What did you keep? All right, sales are important, but the bottom line is all that counts. So concentrate on increasing profits. That's why the course I put together that I created is the Smart Profit Maximizer. All right, that's everything we do is based on increasing your profits. Not knowing your true product cost. Most businesses know their product cost, but few know their ABCs. What's ABC? Activity-based costing. What basically means from the time you start prospecting to the time you collect, what's the total cost of that? It's important, and we got some stories that I could go into, but I don't want to waste a lot of time here because I don't want to make this a half-hour course. But it is important to know all your costs. Make sure you know that. Just to keep it simple, you might have two products. One, the same price. One takes a half hour to install. One takes 4 hours to install and takes a lot more time to sell. What's wrong here? Just keep selling the other one or increase the price to the second. Not having a cash budget. Cash is king. More businesses fail due to cash crunches than due to lack of customers or profits. A properly prepared cash budget can warn you months in advance of an impending cash crunch. This early warning allows you to plan and look for ways to minimize it. All right? Extending credit too easy. Too many business owners selling credit without doing a credit check. If you're not going to check credit, at least get a down payment from all new customers. My experience is those that won't pay you now won't pay you later. The opposite is also true. Not selling on credit or making it too difficult to get credit. Once burned, many business owners make it too hard for future customers to obtain credit. This leads to a decrease in sales and missed opportunities. I got this when I was the CFO, first comptroller and CFO at Magnolia Coca-Cola. New restaurants start. Well, they fail. All right. So, Pepsi and Coke and everybody and beer company, well, they're a little different, but food companies, they didn't want to offer them credit because they knew they would lose money. We were one of the few that said, we'll offer you credit. We'll trust you to start with. But here's the key. As soon as you're late on a payment, you're off. No more credit limits, COD. All right. Now, what is it? Oh, you. What? All right. Last one. Don't get crazy. I don't want her to get fat, so we got those little tiny treats. So anyways, what we did is we offered them credit when they started. They became very, very loyal customers. Later on, when they became, the ones that survived, that got larger, never had to worry about them changing and going to somebody else. Next mistake people make, not staying on top of their receivables. There is no real secret to keeping receivables under control. You just have to stay on top of it. You have to know who owes you. It's true the squeaky wheel gets the grease. Call often, call frequently. Call, go visit. Don't let it get out of hand. Not taking income tax planning seriously. We saved over $4.3 million. That's from $10,000 to $750,000. And it's very simple. We won't charge unless my guarantee is really easy. It's free unless I save you at least 4 times what you paid me. All right? And I've been doing this long enough, truthfully, that I just don't even take the engagement unless I'm pretty sure I can save more than 4 times, okay? Don't forget to do tax planning. Why are you going to send, let's say an average is $25,000 to $50,000. That's money that should be in your pocket rather than with Uncle Sam. Can you do anything with $25,000 to $50,000? Hey, you, settle down, girl. Not taking, falling behind on payroll taxes. This is one of the quickest ways to go bankrupt. This is by far one of the biggest reasons that I have to take people to bankruptcy. Look, if you can't pay your payroll taxes, it's a sign of something else. It's a signal that there's a problem. I ran into that a few years back. I started falling behind. I knew what the problem was, so I sat down and did a really tough look at my business and figured out I had parts of my business that were taking a lot of my time and had half my people and weren't bringing in the profits. Just got rid of them. Now, it's difficult, but that's what we did. Having only a few customers. This is a big mistake I see all the time. I see, especially small contractors, they'll pick up a large customer, they're bringing in $1 and $2 million in sales from one customer. That's not, you don't have a business when you only have one customer. You have a job. I can look back at 2 instances in particular where that big customer, somebody changed, whatever, and all of a sudden they got no business. All right, simple as that. Not outsourcing their bookkeeping. I'm a CPA, I don't even do my own books. Now, I have an advantage. My wife has an accounting degree and runs it for me. But if you got a busy business, your job is to make sure you sell and put out a quality product or service, okay? Not signing all the checks, all right? Once you have an assistant or bookkeeper, it's very tempting to just turn it over to them, pay this, pay that. No, you need to sign the checks. You need to do the bank reconciliation yourself. You need to reconcile every bank. Make sure you close all accounts that aren't out there, all right? Not backing up your computer files. You got to make sure you back up your computer files. And a little note, if you have QuickBooks, back up QuickBooks, even if the whole system's being backed up daily, all right? Using the wrong entity for your business. I mean, I basically talked to somebody recently, had 4 partners. They were they were a partnership, and they were running a business, so there was no good reason to be a partner. And I calculated they were paying $40,000 to $50,000 more in Social Security taxes than they should have if they'd been set up as an S corp. Underspending, all right? I mean, overspending is one thing. We all know don't overspend, so you need to look at things. But underspending is the same. Lots of business owners feel they need to have the best of everything. As far as overspending, underspending. Other business owners refuse. Let me start over. I got out of order. First thing is overspending. I run into this a lot with people that have been in corporate America and started their own business. My rule is if it doesn't affect the customer experience, the money that you're going to spend, if it doesn't affect the customer experience, then you really just doesn't matter. You really shouldn't be spending it, okay? Use a budget, plan your spending in advance to make sure you don't overspend. The opposite is true, underspending, all right? Other business owners refuse to spend money on marketing, education, technology, and training. One of the most important things you need to do is to spend money on yourself to make sure that you educate yourself. I've hired a coach. I spend almost about $2,000 a month, basically to help me build my business, and it's definitely brought back more than I've spent by a lot. All right. Finally, the common money mistakes: not being a lifetime learner. Now I know that doesn't sound like that should be here, but it really is. All right. You're being too cheap, not taking the courses, not learning, not taking the time to go to the seminars. Business world changes. I have changed my business 4 or 5 times in the last 28 years to adapt to technology. Yes, dear. My pup is down here saying, all right, you're done talking. And he's right. All right. Okay, this is the finale of the common mistakes I see business owners do. All right. So the last 3, if you go back to last Thursday, Friday, we did marketing and sales mistakes. Yesterday, we did management mistakes. Today, we did money mistakes. In my 40 plus years working with business owners, these, if you eliminate them, will help you increase your sales dramatically. All right, until next time, this is Wayne Bilal saying, let's make this our most profitable year ever. Thank you very much.